Welcome to Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobis. Well, the bull market was in arrested development on Monday, moving in retrograde with the Dow more than 2% down in the morning. Recovered in the late afternoon, so did the S&P 500 index, but still down less than 1%. What is wrong? Fear is creeping back into the market. Fear is evidenced by the VIX, the CBOE Volatility Index, which shot higher from 16 to above 20, a move of some 25% in just a few days. Well, of course, as the VIX goes up, stocks go down. Here's the SPY, the S&P 500 Index, went down from 138 to below 134 at one point on Monday. Little move lower there. What's causing all of the angst? Well, you've got 7.5% bond yields over in Spain. You've got the troika of lenders back in Greece to make sure the Greeks need to do what they need to do to get more money. Otherwise, the Greeks will be out of cash. And of course, earnings. Earnings season in full effect here in the United States. We've had about 2/3 of companies that have reported so far, about 130 of them, that have beaten profit expectations. But only 40% have beaten sales expectations. So you've got a higher bottom line and a less than expected top line. That's not great for growing things. McDonald's, the latest example of that, missing on the top and the bottom line, however, because of currency translations. They do have a lot of overseas sales and the dollar's been stronger. So with currency translations, they've had a lower profit, but sales were slipping a little bit, not negative, but lower than expected. Mickey D shares taking a big pinch today, 3% down at one point, more than 3% down at one point, below $90 per share for the Golden Arches. Not looking too great there. Things weren't looking too great at Wendy's either. Wendy's is even worse shape technically than McDonald's, below the 50, below the 200, and below the 10-day moving averages. Last week we had Yum Brands, which owns KFC, Pizza Hut. They reported not great news there, just clinging above the 200-day moving average, below the 10 and below the 50. Yum, not looking too yummy. The phenomenon that we're talking about here is kind of that which is described by these two guys, Bill Gross and Gary Schilling. Bill Gross, of course, from PIMCO, has been talking about the new normal, the idea that consumers in the future just won't spend like they used to because they're busy paying back debt or trying to save some money. And Gary Schilling kind of argues the same thing in his book, The Age of Deleveraging. Well, these guys aren't just whistling Dixie. This stuff is kind of coming true. Coca-Cola. Coca-Cola is still showing a little bit of strength here, above the 50-day moving average. People still drink Coke, but they're going to drink more store brand beverages and stuff like that. Coke's paying you a 2.8% yield. PepsiCo coming down to the 50-day moving average. You got some weakness there. Stock yields 3.1%, PepsiCo does. Big dividend payer like Kraft, but Kraft has come down in the past 2 days a good buck or so. Not really big carnage, but Kraft yielding you almost 3% also. Into the land of technology, Apple, the most valuable company in the country by odds, is reporting earnings on Tuesday after the bell. Apple shares got as high as $644. Just a few months ago, clawed back now above 600 bucks. On Monday, they got down to 587. The buying appetite really came back into the stock in the afternoon. Could be something there. The company does report on Tuesday afternoon. 12.9 times expected 2012 earnings for Apple for a stock that's growing revenues at about 48 or higher percent for the year. So you're looking pretty good there, Apple. Facebook, the first quarterly report since the company came public back in May. Here's the stock, came public, of course, 38 bucks, traded a little bit higher that day, got down to 25, about 29, 28.50 right now. Facebook comes out on Thursday. If they've got some good news on mobile, some just good news on user growth, maybe you could get that stock back above 30 bucks.